Hey, this is Danielle. Welcome to Trade Review. Today I'm going to be going over a neutral SPX 0 DTE trade that I did in the trading room right at market close. It is Tuesday, May 21st, and this trade ended up being about a 65% winner, and I was only in it for about 25 minutes. So let's go ahead and cover this trade. And then I'm also going to go over a bunch of the questions that I got on my last trade review video that also was about this exact same trade. So let's go ahead and get started. First of all, looking at the SPX, this is a 5-minute chart. Obviously, the market's closed now because I did this trade the last 25 minutes of the cash session. What I was doing with this trade was basically I was placing a neutral iron condor. You can call it an iron butterfly if you want. But what I had noticed was that there was just a lot of trade right around the 53.20 strike price. There was also a couple different lower time frame squeezes. Whenever you're placing a neutral trade at the end of the day, you do need to be careful because if you see a bunch of squeezes, that can cause some upwards movement at the end of the day. A lot of people were asking, what do you do about the upwards movement at the end of the day? One thing that you can do is look out for these squeezes. If you're a directional trader, and I'm a directional trader as well, I mean, you can also try to trade these squeezes. But the moral of the story with this video is that this was a neutral trade. And the reason why I wanted to place a neutral trade was because once I got into that last hour of the day, I could see that there was quite a bit of high open interest at this 53.20 strike price. Now, if you're in the trading room, you'll know that for the first 20 minutes or so, I waffled back and forth between should I place the neutral trade at 53.15 or should I place it at 53.20? The reason why I was waffling was because at that time, before it hit, and I'm in Pacific time, so before it hit the 12:30 time frame, we had quite a bit of trade around 53.15, right? And it was like, well, 53.20 is the high open interest strike price, but 53.15 is where we've been currently trading. But so many people kept asking me, what do you do about that last final bit of the day? Well, you just got to keep an eye out for those squeezes. And in this case, I thought, because the high open interest strike is a little bit higher and we have these squeezes and we have all this trade at 53.20, let's go ahead and select 53.20 as the center strike in this iron condor because ultimately that is where we saw the most action. Volume and open interest are really important when you're looking for an index or a stock to go to a certain value. I could never explain why it works other than the fact that it's a magnet. And in this case, worked pretty perfectly. So this screenshot was probably about 25 minutes before the market closed. This was the price that I ended up getting on this condor. I honestly, I waited a little bit too long. I could have gotten like $6 or at least $5. Getting $4 on a $10 wide is, I mean, it's okay. I had a lot of questions on my last video, people saying, well, you did that condor so tight. Why did you do it so tight? How is that even going to work out? Well, the reason why it was reasonable is because of the expected move. Okay. So if, for example, the expected move stated that there was going to be a potential 25-point range, then a $10 wide condor would make no sense. But since, and remember, this screenshot was about 25 minutes before the close, since the expected move in that time frame was only $5.12, and we were currently trading at 53.1964, and we were already at that center strike. It made sense to go ahead and say, all right, if I can get $4 when the expected move is $5, that's very, very close to what the expected move is. And that means that I can try to sell this premium and I can try to sell it for 4 and I can just try to buy it back for 2. Okay. If you can get, 50% theta decay in 10, 15 minutes, that is plenty. That's really all you need. I had a lot of comments, people saying, well, but why do you why do you wait until the last 10 minutes of the day? Like, aren't you worried about it moving? A lot of the time I will just get out before that. If you sell it for $4 with a $5 expected move, and then, you wait another 10 minutes, 15 minutes, oftentimes you can get out of it for 50%, so long as that $5 expected move is like this, right? But it's going to depend on the market internals. So let me show you what the market internals were doing. This is a screenshot of the market internals. This is the ticks. This is what I like to use to manage all of my trades at the end of the day, but especially day trades, especially trades in the SPX. And so what I'm looking for is I'm looking for either neutral price action if I'm placing a neutral trade like today, or I'm looking for directional action if I'm placing a directional trade. In this case, up until about 12:30 Pacific time, we really hadn't seen anything in the way of buying or selling the entire day. When you have a whole day and most of the time the ticks are between plus 400 and negative 400, that is a whole lot of nothing. That is a big fat nothing burger. There's no extreme buying, there's no extreme selling. So when I see this, that is a day where I say, okay, I can take a stab at the neutral trade. Now, people said, okay, but then, what if it just starts moving crazy? Well, you would see that in the ticks. So if you're watching the ticks, you're monitoring this, and, let's say I had my neutral trade on, all of a sudden I'm completely wrong. The ticks go up into plus 600, they go up into plus 800. That would tell me I was wrong. Wrong, wrong, wrong. And that is what I would use as a stop. Now, like I said, that was a screenshot that I used when I got into the trade. So if we go and look at the live charts, you can go back and you can see what actually ended up happening today. Now, I thought I was going to be wrong for a minute, because after I got into that trade right around 12:30, there was this one spike, and I thought, dang, got it wrong. It's going to blow outside of my range. Which, by the way, what would have happened if it would have blown outside of my range? Well, it was $10 wide, and I got a $4 credit. So that means my risk was $6. So the max I could ever lose was $6. Obviously you can take a stop if you want. It's kind of hard sometimes at the end of the day with these trades. They move kind of quick. So that's why I usually size with my full risk in mind. But in this case, it was just one tick, and it just spiked up and it came right back down below negative 400. So I held the trade. So the reason why in this case I did not close the trade out with 10 minutes left to spare was because of the ticks. If the ticks are neutral, just not really any buying or selling pressure. It's not really a whole lot of reasons to close it. And, at the end of the day, it goes back to that buying and selling pressure. And then you also need to look at the chart pattern. So in this case, my first 30 minutes of my session, that was from 12 to 12:30. We were trading right around 53.15. Originally, I thought, okay, maybe I should sell the condor there, but I decided to go with the high open interest value at 53.20. So I waited, and I wanted to sell it as close as I could to 53.20 because I wanted it to be neutral. I wanted it to be centered. And so I waited till it got up to this price point, and then I sold it right there. And as you can see, after it hit that level, I mean, yeah, it's going to go up and down, right? I mean, immediately it went up and my trade was down like 50% within 3 minutes, right? But the point of these trades is that you are sitting there, you've identified some technical resistance levels, you've identified your high open interest value, and the only thing you can do after that is just let it trade. You can manage it with the ticks for sure, but the whole point of these is that, it's going up and it's going down, but at the end of the day, um, you want to see it land pretty close to where that pinning strike is. Now, it looks like I waited a little too long to make this video because now it's showing the volume is nothing. I guess I got to make these right after the market close. But at the end of the day, this is saying it's 46% profit. It's actually 65% because this price is not 100% accurate. That's just based off of the mid price in these options, and they've already expired after the market. So it's not really accurate. What you have to do is you have to look at the cash settlement price. So the cash settlement price was 53.21.41. And so when you're looking at this, sorry, should be one right there, 53.21.41. So when you're looking at this, I have sold the 53.20 calls. Those are going to settle in the money for $1.41. So, and then the rest of those are going to expire worthless, which is what you want. So to find out what your profit is, you're just going to do the original credit that you sold, which was $4.05, and you're just going to subtract the intrinsic value of the one option that was in the money, which is this one right here, and you're going to be stuck with $2.64, which is going to equal to $264, which is going to equal to about 65% of that original credit. All right, so that's how I sold this premium today. That's how it ended up working out. You really have to do these on days where there's just not really a whole lot going on. In today's example, there just wasn't really a whole lot going on. I mean, you can go to a 5-minute chart on the S&P. Yes, we did trade higher, traded lower, traded higher, traded lower. But it just wasn't really that exciting of a day, especially a day like tomorrow. Actually, I'll probably publish this video tomorrow. But a day, for example, where you have a big news related event, like NVIDIA earnings is going to be after the close on Wednesday. So days like that, oftentimes they can be pretty choppy that last hour. Anytime there's a big earnings report, or if there's a big Fed report the next day or something like that. But anyways, this is a trade that I did today. I wanted to take this opportunity to answer a bunch of questions that I got on the last video. So if you want to go and review that video, feel free. You can find it in my trade review section. Other than that, let me know all of your questions and comments down below, and I'll make sure to get to those in my next video. Thank you.